Good afternoon, Fabio Ronetti for Winston Capital Advisors, covering the week of November 18th through November the 22nd. And again, the markets put a new record. The SPY is up 25.8% for the year. The QQQ is up 31% for the year, and the Dow a little bit less, 21.41. Again, we had a week where we saw new highs on the market, despite issues like the impeachment, the China-US. The market seems to ignore those until we have more of a color, more of a story. But for the time being, not much there. U.S. equities have been up $6.2 trillion in 2019. And people like ISI Evercore, which to me is one of the best economic boutiques in the United States, says that with the housing and the equity markets, the Americans' net worth is up 10.4% for the year, which probably will augur or a good holiday season. Remember, it's very important as we go into the retail season. So that was very interesting for that side. Money supply is rising faster than the economy. A lot of money is also going into money markets. Money markets are at $3.6 trillion, up 22% for the year, and close to the all-time high of 3.9 in the year 2009, the year of the crisis, after the crisis. So the story here is like, despite this growth in the stock market, we have more money going into the money markets than into the stock market. So many people are thinking that with this backdrop, and remember, the Fed is easing, most central banks are easing, even the Fed is doing this kind of phantom quantitative easing because it's still adding liquidity to the market. It's very difficult that risky assets go down. Then on the other hand, valuations are okay, and more important, always on the last phase of the equity markets, there is a bubble-like behavior, there is, irrational exuberance. And when we saw with especially the valuation of a lot of the IPOs that came to the public, the WeWork, the Lyft, the Ubers, the Slack, clearly the market is not willing to digest any type of deal. So that gives us, a good pause on the valuation of the market, on the sentiment on investors, and the reality, like, despite this rally, we still have a lot of cash going to cash, not into the markets. The way we view it is this 20% is really 10% for 2018 and 10% for 2019. Remember, in 2018, we were doing very well, and the tightening of the Fed and the scare about recession between October of 18 and December will drop all the gains of the year. So to us, it's more like 10 and 10, not really 20%. We have better growth coming in general and friendly monetary policy. We discussed about that. Globalization is increasing. Something that we discuss some of the topics for this week. Globalization has increased correlation on global markets. From the 70s to the 90s, the correlation between the US and the rest of the equity markets of the world was 0.51. From 95 onwards, 20 years correlation went to 0.85. Makes sense. Early 90s, fall of the Berlin Wall and of the Soviet Empire, incorporation of China into the World Trade Organization. We now live in a very globalized world with free movement of capital, free movement of goods. So clearly it makes sense that, all these markets are more correlated. That's interesting. Deal-wise, Alibaba priced it $11 billion on a secondary IPO in Hong Kong, despite the noise, despite the riots, despite the disturbs, everything priced pretty well. It will start trading this week, but was very successful, 2.7 times oversubscribed. We're looking into Q4 GDP. It's early. In the US, we have a little bit of deceleration because of retail sales and industrial production for the month of October were a little bit weaker. But in the rest of the world, something that we've been talking for a while, is getting better. The winner is Italy. It has only like 0.4 on the GDP for Q4. Then it's the Eurozone, Germany, France, and Sweden. So clearly something that we've been saying before, Europe is catching up to the US after this slowdown and some negative quarters of growth. We have better and better numbers in Europe, which we like, and the market knows and it sees. On the other front, slowly and quietly, oil is up 10% since October, which was in the October 22nd, basically for the month, basically stock is up 9.10%. So slowly, oil has been very stable for the year. I think it's good news. It's helping Aramco and this deal that is going around and around. But clearly, a nice number for the energy companies. We have put, after amazing earnings from many of these players, we have put them in our model portfolio. Target, Nordstrom, and Walmart. These are the retailers that are not being Amazon. They have really developed a really last mile reach to their clients, a combination of online and offline, a very good offering in groceries, something that Amazon is struggling. Both Target and Walmart showed very strong numbers in groceries and 30 and 40% growth into their online sales. And Nordstrom, which is in the clothing business, and they don't sell groceries, have positioned themselves very well in different lines of fashion. So we think, and they have rallies anywhere from 10 to 15% on the last 2 weeks because very good earnings. So we put them in our model portfolio because, again, I think they were very discounted that Amazon is going to chew them up, and not so fast. Still, Walmart is the largest company in the United States. It sells about $600 billion in revenues. Very good earnings, and is the largest private employer in the United States after the U.S. Postal Service. So very good there. We like it. And finally, Christine Lagarde, as the new boss of the IMF, is saying to the European countries, please do spend money on the fiscal front. This is not very good if you are not spending money because, we might fall, stalling economic growth, not very good idea. Let's try to do more fiscal spending. We have done a lot on the monetary side. There is not much you can do. We'll see to that. Remember, this is a short week. The coming week, we have Thanksgiving in the United States on Thursday. Friday is limited to 1 o'clock. Usually a day with very low liquidity, but also usually a week with the market always tends to go high for whatever reason. So we'll be, like always, every morning at 8:45 for our clients, reporting live from the New York and streaming live from New York. If you want more information, visit our page, winston.capital. Have a great week.